Hey guys, how are you? This is Eric Bramlett with Bramlett Partners, and today we are here to discuss the December 2024 Austin Metro real estate statistics. It is January 9th today. It's pretty cold outside. I have my puffy coat on to stay warm. Before I get started, I want to remind everyone that we love discussing your specific situation, whether you're a buyer or a seller or an industry professional. It's one of our favorite things to do is to strategize how the market conditions affect you. So please reach out if you would like to discuss that more. Without further ado, I will pull up the stats and we will get started. So the month of December 2024, the stats looked pretty good. Total sales ticked up by 4%. Under contract pending dropped just slightly by minus 2%. But we can call that relatively flat. Active listings increased by only 7%, which caused months of inventory to tick up only slightly to 4.0 MOI, which is considered a balanced market. We always like to remind everyone that in Austin, we are very used to a seller's market, so a balanced market feels quite a bit more sluggish than we are used to. Most importantly, pricing continues to remain stable. This month was pretty nice. We saw a slight uptick in month-over-month average price and median price, and we ended the year up just very slightly on both average and median. I think it's very fair to say that pricing does remain stable. So the question we get from buyers and from sellers is, how's the market? Are things going up? Are things going down? And we can safely say now for around 18 months that pricing has stabilized completely. Volume is one of the strongest indications of demand, and we finished the year with minus 1.4% total sales volume versus 2023. Pretty nice uptick in volume for the month of December. We saw 8.5% increase in total sales volume in the market. Seasonality has remained extremely consistent, and we now have 12 full months of seasonal observations. You can see the number of new listings have continued to decline through the holiday months. Now, the good news is we expect those to begin increasing this month in January, and they should increase into the summer. Same with withdrawn and expired listings. These are the sellers that failed to sell in 2024. That number continued to climb through the holidays as sellers dropped out and decided, hey, maybe we'll try this in the following year. Most important visual to look at when we're discussing seasonality or pending units, and no surprise at all, that the lowest month of pending units was the month of December. That's because it is during the holidays and people tend to spend most of their time with family and friends rather than buying and selling houses. Very important to see that the pending unit demand will increase as long as we maintain seasonality, which we expect to, from January into April and May is whenever it typically peaks. So what's on the horizon? And this is a major headwind that we have faced now for almost 3 years. The tech hiring freeze, which did turn into a layoff cycle. We're not sure when that will turn back around. So the good news is that rate of change has slowed. This means that things are not getting that much worse. So we did see year over year changes in the 20 to 30% range for most of the year, and that's backed off now to about an 8% decline. Very hopeful that we'll see numbers turn flat in the spring, and then we're very, very hopeful that by mid-year we'll see these job postings start to return. Near-term forecast is almost entirely dependent on mortgage rates. Now, we don't expect the market to be worse than 2024 if mortgage rates stay in the 7% range. But the question right now is how much better will the 2025 market be than 2024? We had hoped that the mortgage rates would drop down into the mid sixes by this time. That has not happened. It's due to the bond market. I put this screenshot together a couple of days ago. It was 7.1%. It was a 30-year fixed rate at that point in time. Today, I believe it's 7.17%. But we want to follow that very closely because demand, it tracks right along with mortgage rates. When mortgage rates go down, we see more buyers jump into the market. Whenever mortgage rates go up, we see more people sit on the fence. So follow mortgage rates incredibly closely. That will determine how much better this spring will be than 2024. 2024. The reason why I'm relatively confident that 2025 will be a better market than 2024 is we have almost 3 years of pent-up demand. And it's important to remember that real estate is primarily the utility. That means it's something that people use, it's where they live, and people will buy or sell houses based on life events. So people get married, they want to buy a house, people have kids, they need a bigger house, the kids move out of the house is now too big, and that's what ultimately causes people to buy and sell real estate. Now, mortgage rates and the job market affect those decisions considerably. So for almost 3 years now, we've seen buyers and sellers stay on the fence, they stay on the sideline because rates have not been good. The job market's been a little bit anxiety inducing. And what happens is that home stays too big, it stays too small, and people get sick of it. And so they will say, well, even though rates are in the 7% range, I'm really sick of living in this house, is too small for me, and they'll go ahead and get off of the fence. If rates come down just a little bit, if we see rates get down into the sixes, into the mid sixes, and man, it'd be awesome to see them get into the low sixes, we're going to see more and more buyers get off of the fence with every incremental drop in mortgage rates. So everybody do a mortgage dance, cross your fingers, and let's hope that we do see those rates come down. But I remain confident that as long as rates don't go up by a large mark, that we will see a little bit better market in 2025 than we saw in 2024. As always, I would love to discuss your specific situation with you. If you're a buyer or a seller or an industry professional who'd like to talk about how the current market conditions are affecting you, then please reach out to me and let's strategize. Again, I'm Eric Bramlett with Bramlett Partners. Thank you so much for watching and listening today. I hope you're staying warm, and I hope you have an awesome, awesome week. Thank you.